Hello, I'm Nicholas Hyatt, Investment Manager here at Wealth Club, and today I'm with Will Horlick of Molten Ventures to talk about the Molten Ventures VCT. Will, for those who aren't familiar, could you give us a bit of detail about Molten Ventures and about your own background?
Sure. Thanks for having me here, Nick. It's great to be back. So Molten Ventures is a leading UK venture capitalist investing in UK and European entities, and we focus solely on the technology markets. The business was founded in 2006 by two people from 3i. It floated on the stock exchange in 2016, and in 2016, the VCT struck a co-investment agreement with Molten Ventures, and we've been investing since then alongside them, and Molten Ventures PLC now own the manager. So there are three funds within that entity, which is the VCT, the EIS and the PLC, and we all invest together into qualifying entities. Today, the VCT is about 120 million NAV. We've invested, since we got together with Molten, we've invested 67 million into about 40 technology companies.
What does the Molten Ventures VCT aim to deliver for clients?
So what we want to deliver is capital gain, and that's why we're in the tech market space, because it has the attributes of scaling businesses, recurring revenues, and therefore potentially very high alpha returns when we sell those businesses. And along the way, our target is to pay a 5% dividend.
So you're looking to invest in tech companies, but what sorts of traits are you looking for in those businesses? And is there anything that you completely avoid?
It's a good question. I would put them into two buckets, really. We have enterprise-focused businesses. They have to have product, customers, revenue, roadmap, large market, very good founders. And for those, we're looking at scaling up their growth, and we will help them along that growth path. And then we have in the other pocket, we have deep tech companies which may have developed some very good IP. They may be a year or two away from revenues, but they come with excellent management teams, excellent IP, and deep-rooted knowledge of the area that they're building product in.
And have you got any good recent examples of companies that you've invested in with the VCT that really fit that model for you?
Yeah, shall I just run through about three? So Altruist IQ is focusing on the carbon abatement market. Most people have heard of the voluntary carbon market and offsetting. To us, we think that's slightly commoditized. What we're interested in is going further into the supply chain. So what Altruist IQ does is it enables very large corporates to monitor the carbon output from their suppliers. And they've signed a seven-figure contract with a very large American blue chip with 40,000 suppliers in their supply chain. Excellent management, and that is an example of a new market evolving where we have invested recently. Also in the enterprise space, a business called Worlder, which is a data sovereignty business. For corporates today, they probably use a lot of private messaging apps like Teams, WhatsApp, alongside Outlook. And what is not known widely is that data is not actually owned by those corporates. So in the US, I think in the last 12 months, the SEC has fined corporates $1.8 billion linked to their private messaging. And so Welder actually gives you control over that data as a corporate.
So what about those more established companies within the portfolio, things that have been around a while? Is there any highlights coming out of them at the moment?
Yeah, we have some what I call our trophy assets in there. So if I looked at the top 5 assets, they have an unrealized NAV of over 3 times multiple. But if average revenue of 26 million, growth rates of 30 to 40%, one of our probably the most valuable business in our portfolio at the moment is a business called Thought Machine, which we backed several years ago. That's become the first unicorn within the VCT. That's a $1 billion valuation. They have reinvented core banking software. So they do it on the blockchain, and these are very, very large ticket contracts with tier one banks. So, for example, Lloyds Bank are one of their customers. This is incredibly sticky software, very high recurring revenues. You can't get this stuff wrong. And that business, last reported numbers were 40 million turnover at Companies House, but they'll be north of that now. So that's a very good asset in the fintech space.
And besides funding, what is it that you offer to your investee companies?
We take a board seat on every investment that we make, and the answer to the value in these businesses are the CEOs and the teams that they build around them. Obviously, you've got a product market fit, etc., but it's the teams that are key to this. And within Molten, we have a portfolio liaison executive dedicated to all those portfolio companies. We get our CEOs and CFOs together on a regular basis so they can share ideas. So, for example, if you've got a business that has broken into the US in a certain sector, if we have another business that's looking to enter, it's absolute sense to put them both together so they can learn from each other. We have software within Molten where we can track and manage all the portfolio numbers across the portfolio, and therefore we get some pattern recognition and pattern matching out of that. We also work very hard with finding chairmen, and we know the executives are the ones who are actually going to make our shareholders the money.
Obviously, it's been a very tough economic environment recently. How has that changed the way that you invest? Has it changed the way that you invest?
It hasn't changed the way that we invest, but I would say the dynamic has changed slightly. So if you go back to the heady days, not very long ago, multiples and values were extremely high. So the balance of power, so to speak, in terms of investing has come back more traditionally towards the venture capitalists. So valuations are better. On the flip side, because we value under IPEV, etc., multiples have come off. So, we've seen a bit of a decline there. But as long as the businesses are growing fast, you can grow through that.
And Molten Ventures PLC has obviously been hit very hard in that time, or the share price has been hit very hard in that period where tech has perhaps fallen out of favour at all. Does that have any knock-on effects for the VCT?
No, it has no impact on the performance of the VCT at all. Clearly, a better share price is great. I'm a shareholder. All the people within Molten are shareholders, and we have a very strong, supportive institutional shareholder base. The business is well funded, and we're just focusing on doing what we do best, which is investing in UK and European tech.
And investing in early stage companies is always risky. When you're looking to make investments in a company, how many companies do you think won't make it in the end?
Inevitably, that will happen. And I would say that about 20% of our portfolio will probably be a zero return. 10 to 15 will get some money back, maybe not cost. And the rest we're looking to make very large returns, up to 10x on.
So what about exits? Have you had any attractive exits recently?
Yes, our best returner recently made last year was from the legacy portfolio, a business called Larvale Express. We have a legacy portfolio which is worth 10% of NAV today, and some of these businesses were prior to the Molten deal. So just to show that there's some potential in those, Larvale Express was a shotgun cartridge manufacturer. We did a management buyout and funded that, and return proceeds of just under 9 million and a 5 times return for that business. And within the Molten portfolio, the last exit was a company called Roomex. Roomex is a B2B hotel booking platform for blue-collar workers. It was sold to a US business called FleetCor, and we got a 1.3 times exit from that sale.
And dividends. What are your target dividends as a VCT?
The target dividend is 5%. If I look back over the last 13 years, we've paid a minimum of 5%. Sometimes more, which has allowed us to pay special dividends. Since March 23, though, I said our NAV was down a little bit. This year, we'll pay just under 3% dividend. But we do expect normal service to resume.
So to sum up, Will, if I was going to invest in one VCT this year, why should it be the Molten Ventures VCT?
Well, Nick, if you like technology and the attributes around technology and the potential upside from that sector, then we're probably the only pure play VCT that's on offer in that space. And I think the proof of the pudding is slightly in what we do as managers, the managers, partners and directors. We have over £1 million invested in the VCT. And I think that shows that we are as committed as our shareholders to back us.
Will Horlick of Molten Ventures, thank you very much. If you're watching on YouTube, please press like and subscribe to the channel for more.